Hey, what's up guys? John here. We're walking into what I believe is going to be one of the greatest investing opportunities in the state of Florida that we've ever seen. In 2020, people are flocking to Florida from all over. Los Angeles, San Francisco, New York City, expensive locations, taking advantage of the work from home trend and also the 0% income tax. But what's happening now is a massive curveball is getting thrown at the Florida economy, in which I think is going to force so many people to sell their properties. And given where interest rates are right now, there's not going to be as many buyers as there was a year or so ago. So what is ultimately going to happen is we're going to see an influx of sellers with a very small pool of buyers presenting a massive opportunity. I'm going to break down exactly what's going on behind the scenes here because this is unbelievable. Please hit the like button. YouTube will share this content to educate the people about what's really going on in the U.S. economy. And if you want to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, do not ignore it. The opportunity we're stepping into, you're going to want to be positioned with great credit. One late payment can drop your credit score upwards of 180 points and it will sit on there for 7 years from the date in which it was filed. If you need help, we'd love to help you. At GreatCreditFast.com, we offer a free consultation, a free strategy session to show you exactly what it looked like to fix your credit, how long it would likely take, and answer any questions that you may have. Go to GreatCreditFast.com. Take a look at this. Florida has the highest homeowner insurance. Here's how bad it's gotten, right? The average homeowner insurance premium is $6,000, and that's 42% higher than last year. 42% higher. Not to mention the cost of utilities has skyrocketed. The cost of maintaining a property has continued to increase. Inflation has gotten much, much worse. Yet wages are softening every single year. 4 years in a row, wages are starting to soften. So when you look at what happened, Progressive, they just dropped 100,000 policies. We're going to continue to see insurance rates skyrocket. Right now, we are seeing Florida rocked by home insurance crisis. I may have to sell up and move. This is what we're going to start to see here. We're going to start to see this happen everywhere. Right here, if you see this buzzword right here, will affect South Florida's property insurance rates. No doubt about it. Look at this tweet that I saw, because this ultimately is going to translate not just to residential, but to commercial properties as well. It says Progressive confirmed 100,000 policies we dropped in Florida. First notices going out in December will reduce their Florida exposure by 50%. Specifically, they'll cut 47,000 DHP policies typically used for second homes, 53,000 high-risk properties. They also did not renew 56,000 policies last year. State-backed Citizens Insurance, which sits at 18% market share with 1.4 million policies, will increase policies by 10.2% in December. They're taking over market share, which is a big problem because if Florida gets hit with a massive storm, Florida gets hit with some big curveball, they may cut a lot of policies, or even worse, there could be a situation in which Citizens possibly could go bust. And what would that do for the market? Homeowner insurance quotes are coming in between $2,500 and $3,000 a unit. Older properties on the water without hurricane impact migration can be in the $3,500 to $4,000 a unit range. Think about that. Think about that. $250 to $300 a unit. Right? This is not sustainable, and lenders will be feeling the pressure when debt service coverage is threatened due to these expenses, increases, and rental rate stagnation and or decline. Anyone in Florida who owns multifamily homes want to share some figures. So just so you see that I'm not showing a biased opinion, look at what they're saying here. We're seeing 2 to 3x jumps in property insurance. That's incredible. Thanks for sharing, Daryl. Right here. Oh, wow. I have a 3-2 single-family home. My Citizens hurricane insurance premium was just renewed this month at $3,450, up from $3,130. That's 11%. My hazard insurance in Florida family, 2,500 square foot, 2,500 up like 120 from last year, down 5%. 1950s home with new roof. $2,000 a unit for our Class B multifamily portfolio in Tampa. Over 100% year-over-year increase. 100%. They say, wow, thanks for sharing, Mitch. Luckily, rent growth in Tampa has been strong. Not enough Louisiana, up 200 to 500%. So you start to see what's happening here. You're seeing a completely different type of conversation. And this is what we're going to start to see more and more and more. Florida is the target for this. Meaning, what investors are going to be stepping in. That's what it's going to mean. People aren't going to be able to afford these rates. They're going to step in. They're going to buy these properties. People that either have all cash, people that are okay with the insurance rates continuing to rise. You have a lot of retirees in the state of Florida. You have 1.7 million vacant homes in the state of Florida. This is where snowbirds come. This is where people work their entire lives to come here, buy a home, and retire in the sunshine. Right? Now what's going to happen? You're going to start seeing a lot of these people listing their homes for rent, selling these properties, having big problems. Look at where rents are. Look, this isn't just in Florida. This is nationwide. You're seeing rents continuing to soften. Florida rents are starting to soften here. They're right now, South Florida apartments, rental prices have come back to earth after 2 years of big annual pandemic jumps of 7% in 2022 and 25% in 2021. According to a new residential real estate report, median rents in the region this year, July, are roughly flat, essentially with a 1% increase. But the big question is, how? How can that continue to be when you have this scenario? America's construction boom, 1 million units built in 3 years, another million to be added until 2025. We're going to see so much supply. So if you think about this, you have so much supply. A lot of these Airbnb investors that bought these properties, if they don't have the equity in them and they don't want to let go of those mortgages, they're going to list them for rent. So you think about it. You have the Airbnb investors, you have retirees, you have all this new construction that's going to be hitting the market, all looking for tenants. So what's ultimately going to happen? Increased supply, rents are going to continue to fall. As rents are continuing to fall, insurance rates are continuing to climb, borrowing costs are going through the roof, going from 3% to almost 8%. It's going to be a bloodbath in the Florida real estate market, an absolute bloodbath, especially for institutional investors and syndicators, people that are buying these large deals that are forced to refinance in this environment. So when you look at these numbers and you see what's going on here, it's quite clear that insurance is going to be a real problem for a lot of people, but it's going to be a real opportunity for investors. And that is what I think is going to happen. I think we're going to see so much cash get raised and so much cash getting deployed throughout Florida, throughout California, through a lot of these different markets. I mean, this is happening like here, Colorado, for example. See, Florida, other states see homeowner insurance costs soar. Louisiana governor candidate wants to do what they want to do about soaring property rates. Extreme weather is driving up insurance costs in Colorado. How much does insurance cost in Florida, right? When you look at these opportunities and you look at what's going on right now with oil prices will continue to push insurance up. And the reason for that is because if it costs more to get materials from point A to point B, those costs are getting pushed onto the insurance companies. And the insurance companies are going to push those costs onto consumers. And when you have situations like what you've seen, all these disasters, these fires, all these problems that have been happening, all it's going to do is push more and more consolidation of insurance companies, meaning that they're going to have more pricing power. If there's only 10 or 15 large insurance companies out there, and these lenders, all residential commercial lenders, are demanding that one has insurance on their properties, these insurance companies essentially control the value of these assets. That's what's happening. It's unfortunate to watch, unfortunate to witness, because we're watching people's livelihoods get stolen from them due to what's going on right now. But the big question is, do you think we're walking into a scenario where we're seeing the end of insurance rate hikes, or do you think we're just seeing the beginning of this? I'm betting that we're seeing just the beginning, and I think 2024 and 2025, especially in places like Florida and California, Louisiana, these different markets that offer extreme risk, these markets are going to get hit left, right, and center with massive insurance rate hikes. And it's going to be way worse than I think a lot of people are anticipating. People right now are struggling to hold on. A lot of people are, in fact, if they have no mortgage, what they are doing, many of them, are they're opting out to self-insure, meaning that if a disaster comes, a big problem comes, they would rather deal with it themselves than pay these premiums of $400 a month, $500 a month, $600 a month just to have insurance, because many people can't afford that. I mean, it's like, health insurance almost for a family. It's extremely expensive. So you're going to just start seeing more and more people opt out of insurance if they have the financial means to do so. What do you think about this scenario? Drop below. We'll have a conversation about this. That's what I'm betting on. I'm betting on a big bloodbath in the state of Florida, and I'm betting on a lot of real estate syndicators that raise a lot of money that we're investing up and down the coast in Florida, walking into some big problems in 2024 and 2025. People getting wiped out. Think about it. They're buying these deals at a 3 cap, a 4 cap, meaning if they paid all cash for these deals, they would get a 3 or 4% return. Many of them didn't. Many of them got interest-only loans. They weren't paying down any of the debt on the asset. Insurance rates skyrocketing, and their rents on their buildings they thought were going to continue to rise at 10, 15, 20% a year. Just wait. When rents start dropping at 5, 6, 7, 8, 10% in Florida, these syndicators are toast. They're done. So I think that's what's going to happen. I think we're going to start seeing some of the biggest names in the real estate space fade away throughout South Florida. I think we're going to start seeing a lot of change happen in real estate. I mean, I'm not talking like influencers or anything like that. I'm talking about all of the 1031 money that was flowing into South Florida all over the place. All over. Over the last couple of years, that's what everyone was doing. They were selling their big buildings in highly restrictive, high tax areas, coming to South Florida, buying as many of these deals as possible. Some of the biggest names doing it. I think they're going to be walking into a world of hurt. What do you think? Drop below. Hit the like button. Add me on IG. And if you want to fix your credit, we'd love to help you. We'd love to help position you for the greatest wealth transfer of all time, which we're in right now. It's going to ramp up dramatically over the next 2 years. Don't let the greatest wealth transfer of all time pass you by. Go to GreatCreditFast.com and position yourself for success. We'd love to give you a free strategy session, a free consultation at GreatCreditFast.com. You can click the link below in the description. I'll catch you guys in the next video.